Good afternoon. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in fabulous Las Vegas, Nevada. Today's topic of discussion is going to be the national pulse on the real estate market. The data that we're going to be covering is Keeping Current Matters. I look forward to sharing this information with you. So the Keeping Current Matters data that I'm going to be sharing with you today, it's a shortened snapshot version of a very detailed report. This comes out every month. It's very, very detailed, put together by some economists that really have a good pulse on the national market. So I look forward to going over this in great detail with you. If you would like a copy of the full report, my email address will be shown up at the end of the video. We'd be more than happy to share that with you. And once again, this comes out monthly. So let's get started. So as you can see by this slide, pending home sales has gone up quite drastically across the nation, specifically in markets like Las Vegas and Arizona, where short sales are so prevalent, as the short sales stay in contract for a much longer period of time. You can see by this next graph that historical healthy levels of pending sales is around the 100 mark. We're much higher than that, indicating that it's just not a healthy market. As many of you are aware of, in our market and other markets around the country, it's creating multiple offers on properties and a very low supply of inventory. Year over year, single-family home sales are up nationally. You'll see about a 5% average for the country. The South has seen as a whole a pretty good appreciation rate, with the Midwest at the highest at 9.7. This is a very interesting slide here. Luxury sector of 1 million and above, we've seen a very dramatic increase. The average across the country, 62.3% increase in luxury sales. In Las Vegas, we've seen a huge uptick in the luxury sector as well. Very interesting slide here, looking at return on investment. And note, this is from January 2000 up through February of this year. So it accounts for the bubble and the burst of the bubble. We're seeing about a 45-46% return on investment in real estate. Hence why there's so many hedge funds and investors in many of the marketplaces buying up real estate. Another important factor is mortgage rates. Money's pretty much free right now. We're at an all-time low with interest rates at about 3.5%. That's projected to tick up a little bit this year, but to stay low as compared to the historic average. As this slide shows, they're projecting about an increase to a 4.4 interest rate. This is something that is putting a fire under buyers, so to speak, to where they have more incentive to get in the marketplace and buy quicker, because an interest rate increase of 1 point is pretty substantial in the monthly payment. Okay, this slide here talks about the month's supply of inventory. See, a healthy market is about a 5 to 6 month supply. Here in Las Vegas, we only have about a 1.5 month supply of inventory. So that's a very unhealthy market and seller driven. This slide here talks about the monthly inventory of homes for sale. As I stated a moment ago, about a 5 to 6 month supply is a normal market. If you look and see here, we're nationally, we're way below the healthy market. So most markets nationally are a seller's market right now. The S&P Case-Shiller home price indices, as you'll see here, month over month or year over year, we're seeing a pretty good increase in equity across the country, averaging about a 5.5% return, which is fantastic to see nationwide. This is a great slide here. It's the Case-Shiller, once again, showing the year over year appreciation for the main 20-city composite nationally. You'll see the only area that's in the red is New York. They're having some foreclosure troubles like we had seen in the hardest hit areas like Vegas, Arizona, and Detroit. You'll see that double digit in Vegas, Detroit, and Minneapolis, San Francisco, and Phoenix was off the charts at a 22.8%. Home prices in the short term, it's projected that nationally that the prices may slip a little bit, and that is due to the seasonal change. The January, February time is when the buying and selling slows down a bit. So don't be discouraged if you see that in the marketplace you're in. That's historically what happens, and it should uptick come summertime. Percentage of distressed property sales. You'll see that distressed sales are starting to climb again. The REOs or bank-owned property inventory was down drastically, so that's why we saw a big decline in distressed property sales. In Las Vegas, we're seeing about 50-60% of our sales are distressed, of which about 50% are short sales. Okay, this is foreclosure filings in thousands countrywide. You'll see that what appears to be the peak was in 2009, 2010 with foreclosure filings. With the AB 284 law that was put into effect in Nevada, we have seen pretty much a halt on the foreclosures, but that has changed. We've seen an increase in the notice of default filings starting in January. Okay, these two graphs here show the distressed property challenges in different parts of the country. You'll notice on the left graph that there has been a huge decrease in foreclosures in states like Arizona, California, and Nevada, where the foreclosure rates were leading the nation. If you look at the graph on the right, as referenced earlier, if you look at New Jersey and New York, Florida, it's skyrocketing right now. And it's due to the foreclosure process. It's taking over 1,000 days to foreclose on a property in New York. Some of the challenges that we had seen in some of the harder hit areas like Arizona, Nevada, and California a few years ago, whereas that foreclosure process is streamlined in those states where on the East Coast it's preventing a huge issue with the foreclosures. Capital economics, if you look at the graph here, the slide, it's showing that the Northeast is the only sector of the country that is to, not see an increase in home values. The sector that's probably most relevant to most of you is going to be the mountain section, where we're projecting about a 10 to 11% appreciation rate year over year. This last slide here that I wanted to share with you shows the average days to foreclosure. If you look at Texas and California, Nevada is within that range as well. Look at Florida and New York. That's the big issue here. It's creating a bottleneck where there's a big shadow inventory yet to come on the market in markets like Florida and New York. I hope you found this information of value. Once again, it was a very condensed, shortened version of the Keeping Current Matters report. I would like to go into more detail on this subject with you. This was just a basic overview. If you would like to receive the report or have an educated conversation on what's going on in the national market, or more specifically the Las Vegas housing market, feel free to shoot me an email at info@dalesnyder.net. If you found this information valuable, please share it with a friend and make a comment on the video and like it if you did like the video. This is Dale Snyder with the Snyder Group at Keller Williams Realty. Have a fantastic day.